Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the low time frame bullish scenario where we still expect a move to the upside in a wave B before then continuation to the downside in a wave C in a zigzag 5-3-5 structure. Inside the blue B, we are then looking for an expanding flat, which is here an A, B, C structure, where first wave B is going to take the low of the origin of wave A, before then an impulsive structure to the upside in wave C. What is nice about this scenario is that if we get a move to the upside, price is going to take a double top, and usually double tops and double bottoms are like a magnet for price, and therefore it is always something to keep in mind. The most common target area for wave B is between the 1.38 and the 1.236, taken from the low over here to the high, and wave B has to be a three-wave structure. Now this move to the downside looks impulsive, and then potentially a wave A, followed by a wave B, before then a C to the downside. And if this is a zigzag inside of this wave B, the most common target for a zigzag is around the 1-to-1. Now if we want this 1-to-1, this white line over here, to be in the middle of this wave B most common target area, this retracement towards the upside has to go to around the blue target box that I have over here, sitting between 30.1k and 30.2k. So this is important resistance for Bitcoin, and if we find resistance over here and get an impulse to the downside, then be aware of this area over here for then potentially a move towards the upside. Just below the most common target area for wave B, we have the 1.618, which is a rare target for wave B, but it is in the middle of a very nice support area, sitting between 28.8k and 29.1k. If price then moves towards the upside impulsively in a wave C, then a little bit of trading psychology means that people might start to buy because they're going to see an impulsive structure to the upside, volume is increasing, they think, hey, wait a minute, we might actually go for the highs. But instead, it might then be an ABC structure where we then expect a turnaround here for a move to the downside. And a very nice resistance over here is around the 31.1k to the 31.3k level over here for then a move to the downside. Reaching this level means we take the double top as well, we fill this imbalance over here, we fill this gap basically, hit the order block, hit some other confluences for then a move to the downside. So that is definitely something I am keeping my eye on. If we go to the more bearish scenario, we are looking for a continuation to the downside. In this scenario, we then have a wave 1 or A, followed by 2 or B that is already finished, and we are now looking for a bigger 3 to the downside or a wave C. In both of these scenarios, we are then looking for an impulsive structure to the downside, where preferably you're going to see volume moving with price to the downside. Now this move over here was of course nice, there was a high amount of volume, that's exactly what you want to see. But the follow-up is quite slow at the moment. Currently, price just keeps ranging over here, and we want to see a dump. We want to see a continuation and then a potential wave 1, 2, before then another big 3 to the downside. Currently, if this is a potential 1-2-1-2, you can also see what I highlight more often is that if this is a 1-2-1-2, the problem is that the second wave 1 actually didn't take the low of the first wave 1, which is what you prefer to see in a double 1-2-1-2, being a 1-2, 1-2 and then off, creating some sort of a diagonal where the second one takes the high or the low of the first one. But that didn't happen, so the probabilities of this then potentially being a wave C therefore increase, but it all depends of course on the impulsive move towards the downside. Targets for wave C are between the 1 and the 1.236, between 28.1k and 27.5k, and for a wave 3 you actually want to see the 1.618 hit, which is between 26.6k. All of these fibs are taken from the high to the low of 1 or A to the current high of wave 2 or B. What is also important between the bullish and the bearish scenario is that over here price hit the 382, which for a wave B is a common target and for a wave 2 is a rare target, but also the high over here has been made before the 382 fib time. So if you take a fib time from the high to the low of 1 or A and you double click and you toggle on the 382, then you can see that this high has been made before the 382, which is quite rare, seeing a correction being finished before the 382 fib time of a potential impulse prior. So this is something to keep in mind with the other scenario for moving up, where you then have a little bit of a longer correction in time before then a move to the downside. If we go to the micro scenario, then the first scenario I like to talk to you about is then a micro bearish scenario. So in the just now mentioned bearish scenario where we are looking for downside, right? And then potentially a 1, 2, and then another 1, 2, and then downside. In this scenario, we're then looking for this to be the high of the corrective structure, and we are going to be looking for an impulse. So this is then a wave 1 over here, followed then by a wave 2, and now we want to see a wave 3 to the downside. That also means that we want to see volume pick up, and to be honest, volume in this range in general has been incredibly low, as you can see as well. So in this scenario, if this is a wave 1, 2, then you can count 5 waves over here and potentially another wave 1, but then again, this wave 1 didn't take the low of that wave 1. We could potentially think in a 1, 2, and then a 1, 2, 3, 4, 5 correction continuation, where this is then the second one taking the low of the first one. So this is in the back of my mind, but just the fact that this doesn't look that impulsive is not really giving great probabilities to the bearish scenario. Also over here, you can see that the high of wave 2 has been made around the 1-to-1, which is nice. It's the 1-to-1 fib time taken from the high to the low of wave 1. So this is actually what you like to see for a wave 2, finishing around the 1-to-1, for example. If price would go up once again, then this whole corrective structure is going to be very, very long in time. Not impossible, but it's just about probabilities, of course, as trading always is. Now in this scenario, if this is a wave 1, 2, then wave 2 over here hit the 0.5, which is a common target for a wave 2, so that is no problem. It can move towards the downside, have some bearish CVD divergences over here. But again, where is the impulsivity for a wave 3, right? We want to see a high volume move to the downside, and if this is the high of 2 and this is the beginning of 3, then look at the candles over here, right? They're very, very, very small, so we definitely want to see volume kicking in. Now, what is interesting, I actually found this morning, is that the high of 2 has been made the moment it entered this 3-minute gap over here. So it took the final order block. As you can see, it took this high with the high of this potential wave 2 for then a move to the downside. On the 15-minute, however, what we see is that price has entered this gap twice. So on the 15-minute, the gap is of course bigger. First, we tested the gap with this high, rejected, very nice, but then we entered it a second time. And of course, there are then probabilities to enter or fill the whole gap basically to the upside, which then means we are going to go potentially for that target box as mentioned in the low time frame bearish scenario, which is sitting between 30.1k and 30.2k. Below price at the moment, we have a support area over here between 29.6k and 29.7k, and of course either or, it is important to keep our eyes on the volume and the CVD divergences that are created. If price is moving down here on high volume, volume increasing, bearish CVD divergences here and here as well, then, well, if we get even more bearish CVD divergences, of course, continuation can be expected. But if we get some bullish CVDs or a bounce here, whatever your entry requirements are for a trade, if you see what you want to see, well, this can be a potential long area for upside, of course. In the second bullish scenario, because I do like to show you two in this particular scenario, we are looking for this to be a wave W over here in an ABC, followed then by corrective X and another ABC to the upside. I just want to highlight this scenario because of time. Wave Y is much longer in time compared to wave W, which is not really what you want to see. Usually between wave W and Y, the time relationship is between the 0.618 and the 1.618, but that is clearly in this scenario already ruled out because we passed the 1.618 as we take a trend-based fib from the high or from the low of W to the high of W to the low of wave X. And if I then open the 1.618, you can see price has already passed it. So this scenario at the moment is less likely, but the target area for Y over here is between the blue 1 and the 1.236. And for the white C, with this then being an ABC, is as you can see over here. But more importantly for me is if price moves up, I'm going to be looking for this target box minimum. Price currently bouncing on the 886, taken from the low to the high. But as you can see, it has been tested twice, and the longer price is ranging on an 886, the higher the probability to break it. Preferably, we hit the 886 and we move away, never look back. The fact that we hit it again gives a higher probability for price moving down. Besides, on my chart, we also made a very local double bottom, increasing the probabilities to at least take these lows. In the other scenario, we could potentially be looking for an ABC, so a diagonal in wave A, followed then by a three-wave structure in B, before then C towards the upside. That means we take the double bottom, the 886 is going to be broken, we enter the support area over here, but after entering, we then expect a bounce. So over here, what do we do as traders? We are reactive, we observe what price is going to do in this area to then determine if there's a potential long setup or not. Then the target of wave C can be up there as well, with a fib taken from the low to the high of A, to then the target area that we have over here. And if I then open the wave C zigzag targets, you can see the 1 to the 1.236, most common target for a wave C, is very nicely positioned around that target box, which would be an ideal scenario. If we then look at these CVD divergences, we do have quite the bearish CVD divergences from this high over here to the lower highs that are created, something to keep in mind, but there is enough room to the upside for these bearish divergences to become invalidated, because then price needs to take this high. Of course, at the moment we're far away from this high, but that also means it can still move up and then move down eventually. More locally, bearish CVD at the high. We had some bullish CVDs when price came down, but then price moved up, creating more bearish CVD divergences, which is of course not what you want to see trading the bullish one. So something to keep into account. If we then look at the probabilities, on the low time frame, what I prefer to see on both of the scenarios is the local low to be taken, meaning this low over here, either in the bearish scenario and then a potential three-wave before then a move up, but also in the more bearish scenario to look for a move to the downside. And then after this low is taken, we have to observe what's going to happen. If we then look at the micro, then looking at the probabilities of the different scenarios, a move to the upside is quite attractive. And also you can read what I wrote over here. I won't read everything. This is in the update section of YouTube Silver memberships, where I wrote about this scenario as well as the other one over here. And yeah, there's some information in here if you're interested. But what I would like to see is price maybe moving to the downside, take the double top, reach this support area. Then we observe, right? That's what I write here, observe the target boxes. Then we observe what's happening. And based on what we see, we can then potentially expect a move to the upside. Because for me, the probabilities at the moment, it's not as impulsive as I would like to see. But if volume is kicking in, well, then of course, price moves to the downside. So as traders, we're reactive, observe what's happening at support. If it breaks, well, then we can expect a bigger move towards the downside. And the next area of interest is going to be around 29K. If it holds, I'm going to look for this area over here. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.